Welcome to Get Serious. So in yesterday's episode, I was previewing that we were going to talk about the resolution to purchasing that messy title deal. So again, if you hadn't listened to any of those, it's a deal we've been working on in Texas for over 8 months. Crazy airship situation, a lot of upfront costs. Hard costs on the deal, like roughly $5,000 out, a ton of time involved in it, and it seemed like the seller just ghosted us right at the end, even though he had been super cooperative the entire time. It just took us by complete surprise. So we were considering, okay, are we going to take this in a more legal direction if needed? But first, can we bring him back into the fold with a friendly direction? So and yesterday I talked about how we use, Claude to very carefully craft email and voicemail scripts to very, very subtly indicate that we aren't going anywhere, but like not explicitly mentioning a legal direction because we weren't even sure whether we would have gone the legal route anyway. And depends on all the involved cost and timeline, etc. It was going to be a coin flip if it got to that point, but like I mentioned yesterday, we did all of that work to prep that approach and strategize around it, built out the email and voicemail, and then right as that was being done, the seller came back into the fold. So working through this, and this is there's some general tactics related to settlement statements, HUDs, as well as, some specific to this particular situation. So this was late on a Friday. It had already been a stressful week. A lot of back and forth potential legal, your eyes start to hurt. Brain is just not working properly. But it's okay, I gotta still finalize because title companies always tend to drag their feet right up until the point of closing. And then it's always okay, rush. So let's try to get this done. They're emailing at 5:30 p.m. on a Friday and getting the seller to come in early on a Monday morning, which is great, showing some urgency there, but it forces us to have to react to this too. But it's just the nature of real estate. I don't know if that's ever going to change. It certainly hasn't in our time in the business. And so I was reviewing the initial settlement statement, and again, the kind of overarching, if you only take one thing away from the episode here, and it should be business 101, right? Whenever there's your money and financial statements involved, but every single line item, you got to go through it. And that is the takeaway for closing statements. It doesn't matter how tired you are, whatever. Don't just do a quick scan through. Really look, okay, what am I being charged for? Especially a deal that's been going on forever. We agreed to fund this one 8 months ago. So I really wanted to make sure, and I wasn't even positive on some of the potential legal expenses because we had already done $3,500 roughly in hard costs for a survey before we figured out all these title issues. That was mistake number one that I talked about in a previous podcast. And then we had to get these affidavits of heirship done in order to get the deal to close. And a separate legal, attorney's office had gotten a roughly $700 deposit from us to get these affidavits of heirship done. And we had signed, when you sign some of these, a kind of agreements to, and I should have asked more questions. And honestly, this was probably a little bit before we were using AI for everything. I should have just had the AI go through this legal document before you sign this. What are the key questions, as legal advice to my own end, and go back, make sure all those are answered, make sure you're not getting charged any, potentially running up extra fees from the attorney besides whatever a kind of the firm document cost was, because our understanding was that it was going to be $600 per affidavit of heirship, and they needed 3 of them. So again, that was still adding on extra cost to this particular deal when already it was starting to become more borderline. The market was getting tougher in Texas anyway, compared to when we wanted to buy this at the end of December 2024. It was just a better market in general. And that $700 in hard deposit that we had to go to the attorney, our understanding was that was being attributed to the $1,800 for the affidavits, but there was so much back and forth. It took months to get this done. So I wasn't positive. Okay, are we going to be charged a significant extra fee, both from the title company or the attorney? on the HUD here, and that's something I should have clarified a lot earlier. Again, that's just like a simple AI context request, figure out, okay, what are these questions being made? Like, what's my true risk here from a monetary side in case this deal falls apart? Or, even if we do close on it, like, am I in for like a big eye-opening surprise for a line item that just like makes the deal unfeasible, but we're still on the hook for these legal costs? So that was another bigger mistake that luckily didn't come back to bite us this time, but I would have handled a lot better in the future. And again, we would have more rigorous agreements, which we do have now built into our documents, working with land investors that will require a certain deposit on a deal just in case it goes sour, so that we're not fully on the hook for something that might not work out. Like, there's just a bit of like, we're funders, right? Like, we provide the capital, but like those ones that might require a bit more DD, like can kind of be a death of by 1,000 cuts, right? If some of these deals don't work out. So just some shared responsibility that will still pay back the land investor, assuming the deal closes and we get a profitable exit. But it at least reduces our downside a bit too. So would have adjusted that strategy. And so we noted on the settlement statement first that there was, $1,800 attributed to the affidavits of heirship. So we pushed back on that. We're like, here's the invoice we had received before from the attorney's office, paid like roughly $700. So our understanding that was a deposit. Can you check in on that? Turns out, yep, we were right on that side. So they reduced the cost on the closing statement. They got our address wrong. Like that was one key thing that you should always be paying attention to. Most kind of critically here, and just like, really annoyingly, is that, they provided the first closing statement, and then like within 5 minutes, they're like, hey, no, we looked at the original purchase agreement, and it said that the buyer is going to be paying all taxes. So, you're also going to get charged the prorated taxes on the deal. And that is something we generally never do. And these ones were pretty significant, right? And so like this was also a timing issue plus a contract issue. So again, the intention was we had planned to purchase this property at like the end of December, like right at the start of January last year, in which case there had been like negligible, pretty much no prorated taxes at all. But, because, here we are, end of July, like there was, significant taxes that accrued. And if it's like a negligible amount, who cares? Or if it's like ag exempt, but this one wasn't, right? So there was like $2,100 of prorated taxes that were going to be owed. That's a pretty big hit, especially when it was already a borderline deal and we ran up all these other costs. The market got tougher, and it's like, man, we're going to have to eat this as well. And again, generally, we never agree to pay prorated taxes because you get a double tax hit, right? Like you generally, the seller is always going to pay for them because, the buyer is just going to have to pay it when we as land flippers sell later on. So you don't want to be paying previously owed taxes more on the potentially delinquent side, or like the past year's taxes potentially at most here. But like the current year, especially depending on the time of year that you're closing, it just doesn't make sense to do that, especially when it's like a pretty significant tax hit. And so I had pushed back on this in the email. It's like, yeah, we don't pay that. Hey, and then I also asked our land investor partner in the deal, hey, can you try to work this out with the seller? And separately, we were having a text conversation. I'm like, this is definitely not ideal here. And he was saying, yeah, like my mistake completely, him speaking for himself. Again, we were intending to close on this end of last year without that tax run up. But because we thought we were potentially getting into a legal situation, I don't really want to push the seller here. If we don't push back on this, like he was going to eat the $2,100 cost from his share of the profits, meaning we would get paid that back first before any profit split would come into play. By the time we sold the property, as him eating the cost of those extra taxes, and so it would be a double tax hit, which we agreed to, but it still doesn't like make me feel the best because it's not that as downside protected, because even if we're getting those taxes, that tax hit back at the point of a sale, it still risks downside in case we can't sell the property for what we bought it for. So again, I probably would have preferred a deposit from that, but ultimately, like when I really looked at this deal again, and this was again a late Friday, And I just had to go back to our diligence, like, really, really finalizing, okay, price per acre here. Here's all the extra costs we've got from the closing. Here's our anticipated commission on the deal here. The property characteristics. And we probably had like close to 30 comps on this particular property. And I'm just like looking at, is there any example where our purchase price per acre is not at least the exit price per acre on any of these other comps? I'm like, not even accounting for characteristics here. And we're also including all the closing cost, commission, etc. So like a true final break even. And we were below all of them by like a pretty substantial margin. You can never fully predict the future. It's like a near gun to my head situation where I'm like, I don't see any possible route where we could lose money on this property. Maybe I eat my words in the future, but like there's just I don't see it. Like we are buying so far below what any of these other properties, a lot of them inferior, like without electricity or way worse access, even sold for. So that led me to believe, okay, yeah, this is still worth taking the risk here for that extra prorated tax hit to get this deal over the table. Again, we thought we might be getting in a legal situation. And, again, the land investor working with us is giving us a better deal here, even if we have to get the double tax hit. But we came back to it on this Monday morning and title with their own prerogative. That's why I was like, try to posit it back to them. Hey, we don't pay prorated taxes. At least see if they can try to solve it. And they did. They reached out to the seller, explained the situation on their own behalf, and got the seller to accept, he'll eat the prorated taxes, as is, typical for real estate transactions. And so we don't need to take that double hit with, extra $2,100. Plus, they took off that $700 for the other deposit on the affidavit's fairship. So we were all squared away to get this thing closed up here. So all that to say, again, check every single line item, push back when anything is a little bit unclear or, can work a little bit more in your favor. It's always worth asking the question. The worst they can say is no, or you got to go back to the seller to, potentially renegotiate, or the buyer on the flip side. But I never really have any hesitation of just asking, because every title company works a little bit different. Some line items don't really make sense to me, or I just want additional clarification. It's like, okay, it doesn't hurt to ask, but to figure out what's going on here. So this was one where we could chop off almost $3,000 on anticipated closing costs at worst case. So, it really came out in our favor here. So hopefully this helps. SeriousLand.capital for any of your funding needs. DK minimum, 150K plus purchase price preferred. Zero cost review of your land deals at Land Daily Diligence Facebook group, and landpricer.a. Most reliable land pricing tool on the market. With that, subscribe and share, everybody. Talk to you tomorrow with more good news on for the legal resolutions. Take care. Bye.